All right, awesome, Darrell. Thank you very much. Do a quick sound check. Make sure you guys can hear okay. And we will see what is happening tonight. Yeah, and so, yeah, we'll be spending some time. I mean, for those of you that were already in the class, right? We did the Squeeze Pro class. This is going to be a review. We're going to talk about some stuff. If you were in the class, by the way, we're going to have some additional live trading. If you're in the class, you're welcome to just hop into that for free, no big deal. And then for those of you that just don't know what the Squeeze Pro is, or if you haven't looked at it, we're just going to spend some time talking about it tonight. And yeah, what's interesting here is on gold. If we get an opportunity, I may actually trade gold tonight, because basically what gold is doing right now is pricing in everything that was happening with the central banks. You can see right here that we got kind of a triple squeeze here with the Squeeze Pro. You not only got a couple of red dots, which, by the way, if you were just looking at the red dots on that, you weren't going to see very much. But when you get this combined, you get a really, really nice, clean signal. In fact, I may have to buy some futures here shortly. Let me drill down here to like a 5-minute chart. And yeah, okay, so we are setting up something right here. So give me just a second here. Let me set this up as I explode my computer. Let's see. Well, you know what? I'll just do it on this one. So yeah, what's nice is when we get a setup like this, and then this is something I may hold on to for a little bit. But let's look at, I'll bring up the trading platform here. And all right, so I'm going to go to active trader here. Again, this is just kind of piecemealed here while we're doing this. But I obviously like what gold is doing here. And as you guys recall, what I was doing was looking at a 5-minute chart. So let me just drill down here and just kind of see what's shaking. And I'm going to kill this, come back over here. Let's go to 5 minutes and then come back over to active trader. And all right, let's do the gold contract here. Market order. Oh, we don't want to, that's not going to let me do a market order, right? So let's do, I don't need to do 10 lots right away. Let's start off with 2 contracts. And I'm going to place an order down here. Yeah. 2 lots down here as a limit order. And then I actually don't mind just picking up some at the current market level as well, if it'll let me. This market's very strong. So I don't want to keep staring at this. So I'm just going to do not to be dick for tick. If you got the setup, just get the setup. Okay, so I got 2 at 1432.60. All right. Now what I want to do here is I'm going to look at this real quick, and if this does come down to 25, okay, I'm willing to buy a couple more down there too. So obviously this is not, if you have never traded gold futures before and you have like $1,000 account, you cannot do this. All right, gold futures are pretty big. I would buy 2 more down here at 1425 right there. So I'm going to put an order. So we'll come back and check on it. If you guys are in the room, we'll look at it. And then while we're sitting here, I noticed that the high here is 1439. So I am going to come up here as well and just place some sell orders on a move into new highs. So you can see that there was 39. So I want to, because if we break through that, we're going to spike. So I'm going to go 39.6, and then I'm just going to leave 2 open in case that thing just runs like a bat out of hell. Okay, so we'll come back and look at that. But that's a short version, obviously, of some of the things I like to do on a bigger scale as well. Okay, so that's the GCQ19 contract. And that expires in 28 days. And if you're ever in doubt when you're trading futures, just trade the one that has the volume. There's always what's called a front month futures contract. And if it's confusing, because it is, because futures contracts are non-standard, everyone's a little bit different, just look to where the money is, all right? Because the one that you are going to be trading is going to be the one where the volume is, all right? So always, always, always. So that makes that easy. And okay, so that's off and running. So now we'll go back to, I mean, the trading part's more fun. I wonder what are the S&Ps doing tonight? So you got the S&Ps kind of quiet. By the way, and what's happening here with bonds going higher and with gold going higher, I mean, ultimately that's paving the way. They're already pricing in all the easing that the central banks of the world are going to do, which is not good for the global economy. I mean, they're going to try to boost it up, but they're seeing a lot of scary stuff coming down the pipeline. That's why it's rallying. So ultimately, we would look for equities to sell off, but of course, they've been pretty stubborn here. All right. So we'll come back to that. Yeah, so what we're going to do is we're going to talk about the pro version tonight. We're going to talk about the accuracy of it, ways to use it, and all of that kind of fun stuff. So first of all, welcome, and I'm going to get going here pretty fast. I'm going to just tell the 30-second version of this story, but I blew out my trading account 3 times when I was starting out. The last time was in the 1990s, and I basically had a $150,000 trading account. I had a job where I got relocated to Minnesota with my fiance, my now wife, and we needed to buy a house because we lived in an apartment and our Texas cars died, right? So I needed $30K for a down payment. And at that point, I'd been trading pretty consistently, making about $3K a week. And I just was like, gosh, I really don't want to take money out of my trading account. I'm going to do a big trade. I'm going to make $30,000. So my trading account will go to $180,000. I'll take out the 30, and then I'll still have my $150K. I'll make my $3K a week, and I'll quit my damn job. All right. Well, what happened? I loaded the boat buying OEX puts. The market rallied for 5 days in a row. Strongest rally I've ever seen in my life. Wiped out the account. So on the day of closing, I had to max out my credit cards for the $30,000 down payment, $30,000 down payment. Somehow I got away with that. And after that, I spent a lot of time really thinking, is this something that I want to put my family through? Is this something I want to do again? And it came down to, if I focus on the setups, I'll make money. But if I try to focus on making money, I'm going to blow up my account. So from that day to this day, my whole focus on trading has been to identify high probability setups. And if I focus on the setups, the money will follow. All right. So that's kind of along that vein. The other thing I find is that if you have a good setup, one of the things that a lot of traders have a problem with is FOMO. Okay. Fear of missing out. So FOMO is fear of missing out. And what that means is that you're in a trade and it's fine, but it's not having any action today. And then all of a sudden you see that this stock over here is, man, there's news, there's volume. It's like, man, I want to be in that action. So you get out of your current trade, which is doing fine because it's kind of boring, and you go over here due to FOMO. That's called an impulse trade, and impulse trades will ultimately wipe you out. You make some money, you lose some money, but ultimately that is a high emotionally charged trade, and high emotionally charged trades do not work out. So what you want to do instead is, if you have a good setup, you're going to focus on JOMO, which is the joy of missing out, okay? Because when you see that trade, instead of having an impulse move, you're going to, and falling prey to your mind, because basically when you do that, you're like a moist robot. You're being automatically programmed to chase the feeling of dopamines. Okay, so what happens is you're sitting there, you're looking at this trade, you're imagining yourself in that trade, the money you're going to be making. That's going to trigger dopamines in your brain, and because we are humans, essentially programmed by all these software, whoever programmed us way back when, 2,000 years ago, but it's tongue in cheek. We're going to automatically do whatever it is that gives us that dopamine hit, whether it's snorting a line of cocaine or going for a run or chasing that impulse trade. And you've got to understand that. Once you understand that, you sit with JOMO, and then you stop chasing those emotional impulses, okay? And it makes your life a lot better. So, real quick, my attitude towards like trading and, business and life is that there's no separation. It's just all, it's kind of all or nothing. So I do, this was a great trip where I was in Africa and I was explaining to kids there what I do. That's my son Dylan. He's like, Dad, I've heard this 1,000 times. Please, God, stop. Trade in the office. And, this was great. 50th birthday party with the whole team. That was fun. Did an interview with Lance Armstrong not too long ago, which I know a lot of people think he's a jerk, and I guess, in a way he kind of is, but it was a very refreshing and interesting conversation. Oh, and this is something, we do some trips with Virgin Unite and Richard Branson, which is fun too. So I kind of like try to incorporate all that, like with trading and raising kids and having a family. And having a business around trading, and just it's all together, right? So there's just, you know, I'm checking quotes on the phone and all that kind of fun stuff. All right, so when it comes to squeezes, I love squeezes, right? I mean, it's the setup I like the most. It's a setup I've been using for 15 years. Okay, 15 years, and they help identify the times in the market where it is about to enter a focused, concentrated, and what I would call greater than expected move for those of you that have experience with options. And the reality of it is markets chop around about 80% of the time and only have focus, conviction-backed moves about 20% of the time, right? It may not seem like it because it may seem like, no, John, it actually, they move more than that, and you'll be surprised when you really look at it. So I found with the squeeze, it's kind of like, to me, the squeeze is, if you've ever played blackjack, it's like when you have a high count in blackjack, okay, if you've ever counted cards. When you have a high count, when you're playing blackjack, if you're counting cards, you get to the point where you've got like a 75% probability of blackjack, okay? Guess what? During those times, you bet more. A squeeze is kind of like that same thing. If you do not have a specific signal, guess what? It's a 50-50 shot. You might be right, you might be wrong. If you have a squeeze, suddenly it's like a high card count. You've got a 75% being right. Increase your bet, or ignore, don't bet at all if you don't have one. So I think, and most of you probably know what that is. If you don't know what a squeeze is, these red dots indicate a market that's gone quiet. It's about to release energy. With this first green dot, if the histogram is above 0, it's a long. By the way, I like to get in while there's still dots. We'll talk about that. And then boom, there's your move. Okay. And guess what? When it's over, and it's over when you get the loss of momentum here, guess what? You're chopping, choppity, chop, 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 chop. Here's another squeeze, and boom. This one, in this particular case, you can see it was good for about $23,000 in terms of getting into this long options and then flipping them out. So I love the squeeze, but I always came to the idea of, is there something better? And I never was really looking for something to replace the squeeze, because it's the most versatile tool that I've ever come across in all my years of trading. I use it on stocks, options, futures. We just used it on some gold futures right there with that 5-minute squeeze. We'll see if that one fires off and signals while we're doing this talk. If not, it'll be later. And not only does it pinpoint moments in time when you can look forward to a greater than expected move, but it also works well and complements many other trading tools and systems, okay? And some, it's my favorite. And squeezes are good for those bigger moves. It's great when you can get a home run, when you see that rare focus move where you maybe got a weekly squeeze and a daily squeeze. You can take a little bit bigger size and boom. Those obviously add a lot of nice trading capital to your account. Now, of course, not every squeeze works. It's about a 75% win rate. That actually increases to about 83, 84% if you bring in a couple of other factors. And not every squeeze is a grand slam home run, okay? The nice thing about a squeeze is that you can generally see on average what the move will be, and then every once in a while you get something that's way bigger than average. That's pretty nice. And obviously the signals, there are bullish signals and there are bearish signals. But it is the most consistent strategy I've found for not only isolating potential home runs, but for keeping me out of the market if I shouldn't be in. Remember that whole FOMO versus JOMO. The squeeze is such a clear signal, and the entry procedures are so clear that if you don't have that situation, the number one thing you can do for yourself to improve your trading results is to not do anything if you do not have a signal. And visually, the squeeze and the way it's set up really helps with that, because otherwise then you succumb to impulse trading, and then basically this is never, ever, ever, ever going to work for you. Okay, so let's back up here a little bit. So here's a chart of Momo. So we got FOMO, we got JOMO, and now we got Momo. That was a total accident that I chose that symbol and those, but that's pretty funny. So if you look at this, okay, believe it or not, the main problem is that if you look at this and it seems like there's a lot of movement, right? But really there's a lot of chop and a lot of noise, okay? If you look at this, chop, 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 okay? Chop, 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 chop. If you're buying options in this crap, you are going to get destroyed, okay? Now, obviously, if you're a more advanced options trader and you're doing something more theta positive, iron condors, et cetera, that's fine, that's fine. But a lot of times when people are doing this, they're looking for those directional moves, buying a call, right? Buying a put. Obviously, I love theta positive positions as well. But the main thing is that I want to know, well, let's say that you're looking to do theta positive positions. Well, and if you do that, and just as you place on an iron condor, the stock explodes higher, that's no fun either. So not only is this good for knowing when you have a potential for a greater than expected move for a directional play, but it also helps that if you are a premium seller, you avoid getting run over by a freight train, okay, which is also huge, okay? So what does this mean? So one thing I found over the years is that if I get into a stock when the Bollinger Bands are expanding, okay, I'll say that again, if we get into a stock while the Bollinger Bands are expanding, then it's generally going to be your worst entry. Okay, so what do I mean by that? So here you can see the Bollinger Bands are expanding, right? And you're like, oh my God, I'm going to get in, you know, crushed. Okay, Bollinger Bands are expanding, I'm going to get in, crushed. Okay, Bollinger Bands, man, look at them expanding, crushed. The best entries happen when the Bollinger Bands have contracted a specific percentage of their overall range. Okay, otherwise you are entering at a time when the price action is very random and whippy, which generally leads to people getting stopped out. Okay, so of all the action on this daily chart of Momo, the only 3 times it makes sense to enter the stock because you'd have an edge, directional edge, is here, here, and here. Okay, so again, that's always, you know, obvious on hindsight, right? It's like, okay, well, how do you tell that in real time? So the end result is if we're not aware of that, you will automatically, no questions asked, fall into this routine. Okay, and this is how the market is designed to suck people in and take your money. You get into a trade, it's exciting, it's thrilling, you feel euphoria. Okay, if that's that moment, you go high five your neighbor, and then it starts to come back and you get a little anxious. And then there's denial, because at denial you're like, man, as soon as it gets back here, I'm getting out, because I was up $1,000 and that $1,000 is mine, and not only is it mine, I've already spent it. So that market has to come back, and when it does, I'll get out, and then I'll have that money. And then it's fear. Oh my God, maybe this isn't going to work. And it's depression, because then you know it's not going to work, but you're not jolted enough to take action yet. And then panic sets in, and then capitulation. Okay, and capitulation is you're like, you curse yourself, you throw your keyboard against the wall, and you're like, damn it, I can't believe this happened to me again. I can't, this trading sucks. They're out to get me. And they're not. You just were a human slave to your emotions. And if you're a human slave to your emotion, if you're unaware, okay, low awareness, this is what you automatically fall into. The good news is, if you are aware of this, then you'll know that the moment in time when most people are capitulating is also your highest potential for earning. And the squeeze actually gets you in on that naturally, which is nice. Yeah, and you know, and this happens to everybody, because you know, there's these moments in time when things are kind of like going crazy, and you know, you kind of jump in stuff and it's like, oh God, did I just do that? But if you only limit yourself to doing a trade when there's a squeeze and only entering at certain levels, you're going to eliminate that 95% of the time, which is great. So the awesome thing about all this is that when the Bollinger Bands contract, this represents a compression of volatility. This means that the stock just got really quiet. Okay, there's a very beautiful thing about this, because you don't have to even know very much about options. But if you are buying options when a stock has suddenly gone really quiet, you are going to get those options at a cheaper price, meaning that the premium portion of that option is going to decrease because the market has gotten quieter. The stock has gotten quieter. All right, so your premium portion is going to decrease. So you're buying options at an optimal time, and then when the squeeze fires and the volatility increases, your premium portion of the option expands. Okay, so you don't even have to know what you're doing with options, and the squeeze works perfectly for that. And that's another thing too, is it can only stay quiet for so long. A stock doesn't stay in the squeeze forever. It's literally building up energy, getting ready to pop higher or implode lower once the Bollinger Bands stop contracting and start their expansion phase again. So this gives us a huge advantage in terms of timing. All right, 80% of the time, market movement is random and lacking conviction. There is no reason to risk your cash unless the odds are strongly in your favor. I want to say that again. There is no reason to risk your hard-earned cash, okay, unless the odds are strongly in your favor. We ain't doing this for 50-50 odds, okay? So great. what's the key problem here? How narrow do the Bollinger Bands have to get in order to be a legitimate high probability signal? Okay, because that's really what it comes down to. Just like, you know, what's got to happen here for this to be a legitimate, a legitimate opportunity, a legitimate trade, right? So when you do get a signal, how do you know when to get in? And more importantly, how do you know if the stock is going to go higher or lower once it starts to make its move, right? And, you know, this all looks good on a PowerPoint in hindsight. And last, once you're in, how long do you stay in the trade? When do you get out? That's the hardest thing, right? If you've ever heard the phrase, eat like a bird and shit like an elephant, pardon my French, that means that there's this nervousness of like, if you get a small profit, you take it, but you don't really have a plan if there's a loss. Make $100, make $100, make $100, boom, lose $1,000, right? That's not a sustainable plan either. So the really what this comes down to is, how can you tell when the Bollinger Bands start to contract, which means you should get out. Okay, so here's the squeeze. So the squeeze here is that when there's a red dot, the red dot is basically saying the Bollinger Bands are at an acceptable narrow range where it's safe to get in. Okay, here we go again. Let me, the Bollinger Bands are at an acceptable narrow range where it's safe to get in. All right, the Bollinger Bands at a narrow range where it's safe to get in, and on and on and on. So all of a sudden now, these red dots are saying, oh, you are in the safe entry zone. Okay, so you ignore this, you ignore this, you ignore this. Safe entry zone. Awesome. Boom. Okay, safe entry zone. Awesome. Boom. And it works on the short side. Safe entry zone, right? Boom. Safe entry zone. Boom. Safe entry zone. Boom. So that's what we want to find, is those high probability moments in time. So now this was Momo. Sometimes I'll trade stock. In this particular case, I did 7,777 shares of stock. You know, 7's kind of a lucky number. And the reason I did this particular trade is to show you the power of options. Okay, believe it or not, this stock represents, give or take, 78 options. Okay, because one option equals 100 shares of stock. So that's obviously rounded up. So here I got 7,777 shares of stock, right? And if you do the math on that, what is that going to cost you? Well, let's see. So 7,000, if I can do the math here, times $40. Well, 42.92. So yeah, 42.92. So that means you need to have $334,000 in your account to do that trade. Okay, it's like, oh my God, that's a lot of money. If I wanted to do 100 contracts, which represents 10,000 shares of stock at $5.30, that's going to cost me $53,000. All right, so again, $334K to buy 7,700 shares of stock, or $53K to buy 100 contracts, which equals 10,000 shares of stock. All right, now guess what? If you've got a smaller account, one contract, which equals 100 shares of stock, is going to cost you $530. Okay, or one of these $40 calls at $2 is going to cost you $200. All right, so the nice thing about options, if you're newer to the concept of options, I know a lot of you are not, is that it's a way to participate in the price movement of a highly priced asset at a very cheaper price. And it works well if you know what you're doing. Okay, if you don't know what you're doing, options are the devil. Okay, and they will take your money from you because of timing. Okay, so when you get the timing right, the biggest barrier to enjoying solid gains with options is timing. When you get the time and direction right, you can do beautiful things with leverage. Okay, so obviously at this point, you probably realize that I really, really do like the squeeze, right? Squeeze is awesome. And I started to ask myself, what have I missed? You know, I've sat with the same settings for this long. You know, what have I missed in terms of the squeeze? By the way, let's see how gold's doing here. So this 5-minute squeeze, it hasn't fired yet. We're trying to see if it's going to fire. My first target, remember, I got a target up here for 2 contracts. I never got filled on my other 2. And if this thing can go, in a perfect world, what happens is I'd get filled on those 2, and then I'd just keep running. All right, so the squeeze hasn't fired yet, but let me, if you guys are watching this, let me know when it fires, because basically how you manage it is you stay in until you start to lose momentum. All right. Okay, let's see here. Oh, thanks, Alan and Mike. Yeah, you guys did the math for me. Okay, so here's the thing. So hopefully by now you see, like, man, the squeeze makes sense. I obviously like the squeeze. And here's a weekly chart of the S&Ps, okay, with the spiders. There's a beautiful squeeze here. You can see high probability moment to get in, nice move after, okay? And by the way, you can stay in it as long as the momentum's going your way. And if there's two bars where you lose momentum, at that point, the trade is over, okay? So the squeeze here is right here. That's your universe. Okay, and then it's over, and there's nothing. Now that's a good move, right? Nothing. Another setup here, nice. Big move here, nothing. So that's when I was thinking, like, okay, well, maybe there's some settings here that we should play around with that could help us catch more moves, because I really appreciate the squeezes that do set up. It's just that, are there setups to do that? Yeah, no worries, Jake. Have a good night. I know those time zones. Okay, so different settings. So what settings work best in terms of the most signals with the highest probability of working out? What settings show that really big potential move shaping up? And last, what settings could give us a heads up that a normal squeeze is about to set up so we could get in early, okay? So check this out. So here's I call it the old squeeze, but I don't want to imply that that means we're throwing it out to pasture. I love the old squeeze, okay? Here's the new settings. So let's call it new settings. The new settings, and we back tested 15 different versions of this, but the new settings provide more signals, okay? And you would think that maybe because it's providing typically twice as many signals, you might think that those signals would be less accurate or less stellar, okay? Towards the end of the presentation, I will show you that they, in fact, are actually not only do you get more signals, but they're typically a little better, okay? So that's what I was shocked by. I'm like, okay, so what we're gonna do is we're gonna increase quantity, and for an increase in quantity, we're gonna sacrifice quality just a bit. And in fact, it was the opposite. We're increasing in quantity and increasing quality, okay? And again, it's not throwing the red one out to pasture, because you'll see how these things work. All right, so the new squeeze settings, okay, great. So here's the old one, boom, it's there, and the new one's there too, and in fact, it's giving you a heads up. Here, no love, new settings, caught that move. Here, no love, new settings, gave you a heads up and caught that move, okay? Now here, yep, old one came in and caught it. New one here kind of started giving you a heads up. It's setting up, it's setting up, it's setting up. Beautiful thing here is that when the old one fires, the new one typically fires a little bit later. So it's kind of like it's the wind beneath its wings, so to speak. And then right here, after this huge rally, we had a couple weeks of consolidation. No love here from the old squeeze. New one comes in, knocks it out of the park. So it was pretty nice there too. So again, the idea with this, you're getting more signals, more at-bats, more fat pitches, okay? And that's what I liked about it. And so this slide here on slide 21, you guys will get a copy of this. You can see here that basically you get more of a heads up, all right? You get more of a heads up. And the way this works is that with the black squeezes, you can get black squeezes by themselves. If there's a red squeeze, it's always preceded by a black squeeze, all right? So there's that squeeze, nothing here, boom, nothing here, nice heads up, okay, and then nothing there. And then we'll look at some current charts as well. I would try to add them to the PowerPoint, but we'll look at some live charts as well and kind of see what's shaking there. Okay, so check this out. This is where I started getting really excited. And it's great talking to you guys, because if I'm talking to my wife about this, she will physically start yawning. And I have the same reaction when she starts talking to me about fabric colors. Like, look, I love I love that, that she wants to come in and change the house and decorate it, and I love the end result, but I don't want to hear about it. Like, my brain shuts down. And I think she's the same way when I'm talking about trading. So we've got our code word, which is drapes, which means I love you and I don't want to hear you talk about this anymore. And we're free to use it on each other at any time, within reason. So if you look at this, the old one here, yeah, it caught that move. Okay, nothing here. New one, boom, caught that move. Old one here. I mean, the one dot squeezes, those are so tough. Like, I a lot of times I don't even see them. I miss them, et cetera, et cetera. New squeeze, plenty of time. Okay. Beautiful move down. Old squeeze, nowhere to be found. New one is all over it. Okay. And this is what I started to find, is that this was happening over and over and over again. Okay. Okay. So the 5-minute squeeze on gold has fired long. All right. So let's come back and take a look at that here. So you got the squeeze firing there. Let me see if I'll get this one over here too, because it's a little easier to see. So the squeeze is starting to fire. So let's see here if this thing can, get a little bit more action. So on something like this, what I like to do is that when it fires, you are typically going to get a little bit of action. You can see right there, there's some resistance at 14.35.60. We're at 32.30. So if we can punch through there, we should kind of get going pretty good there. Should get going pretty good. And you can see it's starting to walk its way up here. And then the overnight session is generally quieter than the regular session, but you can see it's kind of climbing up here now. It's up $640. A little bit of pressure there, a little bit of pressure, and we'll see if that thing can keep climbing. So I've got my, I've got, how many contracts do I have here? 4 contracts. So I'm going to split this up a little bit here. I'm a big believer in kind of, taking some chips off the table as you go. So I'm going to take one here since it's already fired. Otherwise, I could just sit on it. And then, all right, so I got one out. So I got 3 left. So I've booked some profits. I've reduced risk. The other thing I can do here is that once the squeeze fires, okay, now this is a little tight, but we are on a 5-minute chart. Once the squeeze fires, I generally like to start reducing my risk with some stops. Now, I'll typically do that maybe about 3 dots in. So for right now, we can kind of give it a little bit of room. It's continuing to kind of grind higher just a little bit. If it can bust through that 35.60 level, okay, which is only $2 away, then things could get fairly interesting fairly quick. I mean, this is a lot more fun than looking at a PowerPoint, right? But I guess I should get through that PowerPoint as well. Okay, so we'll keep checking in on that. Okay, let's put that over here. Okay, so we talked about that. So, woohoo, we got excited. And so this was a great find, obviously super excited about that. But I also wondered, are there rare instances we should know about so we can be prepared for when they occur? And what this means is yet a third setting, okay? So what this does now is, here's a weekly chart of the NASDAQ, okay? And now this middle setting here, you can see there's orange dot, okay? So you got red dots, which is the old setting, right? Old setting. This is the new one we just reviewed, and then this is kind of what I call super compressed. But when it shows up, you got to pay attention, because if that one also shows up, you're generally going to get a bigger move. Okay, here we didn't have it. That's fine. I'm still taking it, right? I'm still taking it. But when that shows up, I'm just like, a lot of times I'll kind of take a little bit bigger position. Okay, so yeah, the black one here is giving us a heads up. Nice move here. Got a heads up here on the down move, great. And here it's the only signal. Remember, the black one's the fastest one, and that was the only signal that was there. So here's Shopify. This is one that's been all over the place here, but recently here we had the normal squeeze, but also we had that heads up. We had that squeeze going, ooh, if that's going to be involved, this is probably going to be a bigger than normal move, right? So it's nice when that appears. It doesn't happen very much, but when it does, I want to know, all right? And it doesn't have to be just weekly charts or daily charts. This is a 30-minute chart of the NASDAQ. Choppity, chop, chop, chop. Oh my gosh, we get the orange ones, which are rare. Again, typically you're going to get a little bit more explosive move there because it represents really, really quiet. So the key problem here is I love this upgraded version. What I don't love is having to look at 3 squeezes. Okay, I need things lined up. I need things to be very, very easy. I always say if I can't explain what I'm doing to a 12-year-old, it's too complicated. So I asked Eric if he could clean this up, and of course he said, let me take a quick look, and here's what he came back with. He took all of this, okay, all of this, and just compressed it into one line, okay, and that's what the Squeeze Pro is. And what you'll notice here is that the Squeeze Pro combines them. So the black dots, boom, they're dropped here. Now, if there's red dots, you can see there's 1 dot there and 3 there. If you drop it down, they'll show up on top of the black dots, okay? You cannot have red dots without black dots. That's the way it works. And so if there's red dots, that means there's a black dot underneath. So what's nice about this now is we just have one line to look at, and it makes this a lot easier, okay? So here's into it. We've got the Squeeze Pro at the bottom, and here's just the old one on top. So boom. You can see that you got the squeeze, the black squeeze, there's the red one sandwiched in between. No love here on the old squeeze, boom, there's a signal. No love here on the old squeeze, boom, there's a signal. 1 dot squeeze, I hate them. I never even see them in time. Plenty of heads up here, nice, smooth cadence. Nice short signal there, nothing here. 1 dot squeeze, hate them, you know, et cetera, et cetera. So you can see again, a lot more frequency of at bats, a lot more fat pitches, which is nice. PAYC, by the way, this is setting up again. Remind me as we get closer to the end, we'll look at some live charts and see what that one is looking like as well. Beautiful squeeze here, and you'll notice here that when we look at the Squeeze Pro, what's the difference? Oh gosh, there's an orange one setting up, an orange one setting up, and there, you know, it gives us a little bit more oomph there too, okay? A lot of times too, with the old squeeze, sometimes it would fire and then go back, and that was always confusing. But what's nice here with this is you don't get that because of the 3 that are combined. All right, so from there, TLT, here's a daily chart. This squeeze here was a super nice. With this one combined with a monthly signal, we bought leaps a year and a half out, and since this thing has just rocketed like a moonship, and it's continuing to go higher. All right, yeah, TLT is really, really cool. Oh, it's your first time trading gold futures? Very nice. Yeah, well, let's take a look at this again here on the gold future. So you can see here it's continuing to grind up. So we're now 2 dots in. Now remember, this is a 5-minute chart. This goes fast. The average squeeze lasts about 7 to 8 bars, okay? And in fact, what we can do here is say, we'll talk more about this later, is we can see like, okay, on a 5-minute chart, you know, the average squeeze lasts, it's about $1.50. Okay, obviously on a larger time frame chart, it's going to be a bit bigger. So it tempers our expectations. If we were looking at a 30-minute chart and we had a squeeze on a 30-minute chart, which we don't have, but you can see like, oh man, the average move on a 30-minute chart is about $2.50. Obviously, if we were looking at a daily chart, you know, the average squeeze is going to be like $29, $32. So the nice thing about this, and again, I'll talk more about this tool as we get there, is it kind of gives you some expectations of what makes sense. And in fact, what I want to do here is, since we're kind of 2 dots in and the average move is about, you know, $1.50, okay, well, we got in at 32.20 and we're at 34.40. So we're kind of at the average move for a squeeze. Now, I like to keep some on as long as we're, you know, kind of moving along here. But let me go ahead and just kind of take one more chip off the table here. And again, when you want to get out, there's a saying, do not to be dik for dik. You know, don't, you know, it looks like we got a little bit of strength here. So there, it sucked up my offer. So great. Oh, and by the way, I need to cancel my order down here because I'm not buying that anymore. So now I've got 2 left. I need to manage this, right? So at this point, we've gone the average move, right? We already know for a fact that we've actually gone the average move of a squeeze in gold on the 5-minute chart. So guess what? I don't have any excuse for this to drop 10 points against me and screw up my P&L here. So what am I going to do? I'm going to put a stop loss here. So I'm going to do, let's do 1 contract here. Again, when you're long, you're going to do a sell stop, okay? Guess what? Now, if this thing does fall and I get stopped out, I've still booked my profits, okay? Now, what's nice about this is on a 5-minute chart, and thank you, Gold, for cooperating on this and firing off a squeeze right when we started. You do the same thing on a daily chart, but obviously you don't have to do it as fast, okay? But the whole point here is risk management. Now, I've got this Hail Mary order out here because we can see here's the high, and maybe gold's gonna light on fire here again. But if you guys are watching this, let me know if momentum rolls over here, because if it does, that's gonna be a signal to get out. And of course, you could take a few more chips off the table if you wanted to. Okay. Okay. Yeah, and Steven, so I'm a big fan of scaling out, and then on that last contract, just let it go. That's the one you can play there. But you want to, yeah, scale out, scale out, scale out. Okay, so that's that one. Oh, by the way, see the bar here is turning blue. That's good. That's a good sign there too. We'll talk more about that. But yeah, we'll see where gold is here as we get closer. Okay. Let's see there. All right, where are we? TLT. Slide 32. Okay, I got to get going. Okay, so S&Ps, yeah, great. 30-minute chart, signal, any time frame you want to do. Honeywell, this is a daily chart. You can see here, beautiful signals here. Only signals from the new squeeze, not a lot of the old squeezes. Okay, so again, I liked all this kind of stuff. It's great, but I really wanted more. Okay, and look, and Eric, he can do anything. So, well, I like to push and say, like, look, is this something you could do? And he's just like, well, I can dive into the software and see if it's possible, and if it's not, I'll tell you. Fair enough. So he dove into this, and the next thing I wanted to look at is, because the biggest question I'll get with stuff like this is like, okay, well, you know, how do I know when to get in? So typically what I like to do is when I see a squeeze, I like to wait 5 dots, okay? And after 5 dots, is there a buy or a sell signal? Okay, now that signal could change, but oftentimes after 5 dots, if everything's kind of cooking with gas there, that's typically the ideal entry. So guess what? Eric threw in some signals here where it's like, okay, if there's 5 dots and it's a buy, we're going to throw a nice little arrow right there, and it's going to be color coded. If it's a black arrow, it's going to mean that there's a black squeeze. Okay. If there's and if it's on top like this, it's a sell signal. Okay. So here you got a sell signal on the black squeeze. You're like, well, this thing's rallying. That's stupid. And then you got another sell signal on the red squeeze. And then ultimately you can see this thing really puked, because when it fired to the downside. Okay. So then we're down here. Guess what? Oh, let's buy here. Great, that worked out good. Let's buy here. Oh my God, that worked out too. Okay. Now in this case, you can see there was 4 dots and no arrow, but because it's really tough, in my opinion, if it's only like 2 dots, it's hard. I prefer getting that 5 dots. If I'm going to enter in early, okay, and that's the whole point of this. If I'm going to enter in early, I want to see that 5 dots. We got a nice squeeze forming. It's just kind of hanging out there, and we got the arrow, and it can kind of ease in. When you get something like it's 2 dots and then it fires, well, if you want it, you just got to get it. You don't get that early, luxury of kind of easing into the trade. Okay, so boom, here you had one. Here's an example of, you have all 3 readings, okay? All 3 readings, you get the black arrow designating the buy signal on the black squeeze, which, by the way, is hidden underneath those dots. You get the red arrow, buy signal on the red squeeze, and you get the orange arrow, which is the buy arrow there. Boom, then you get your move. So that's, again, it's kind of nice when that happens. Google, same thing. I do like that daily chart. Daily chart is typically the chart I'm taking the most signals from, but that doesn't mean that it's the only one. I mean, you can see tonight I've done a 5-minute trade on gold. But the nice thing about this is that the monthly chart, you get more signals too, okay? Look at this beautiful monthly signal on the Qs. Guess what's happening right now, okay? We've actually got massive monthly squeezes happening all over the place right now, okay? Some of these could fire long, some of these could fire short. We don't know yet, but it is pretty hairy, the stuff that is happening, okay? Yeah, we'll actually look at Roku, because we did have a trade in Roku today. Okay, so from there, we've got, here's IWM on a weekly chart. Okay, so again, nice. If you're looking at this, great signal here, okay? And it was just the black squeeze. Great signal here, just the black squeeze. Nice combined long signal there, nice combined long signal there. The short signal was just the black squeeze. So again, we're getting faster getting faster signals here. Let's come back here and look at gold because PowerPoints are boring. So we got a high here of 39, right? We're cruising. Here's our stop losses. Obviously, at this point, I don't want to get stopped all the way out down there. Let's go ahead. I'm going to cancel this sell order. Let's go ahead and flip one else out here. What the high here is, what is it again? Right at 39. So sometimes, especially on a 5-minute chart, it may take a little bit of power to get through that. So I'm going to go ahead and take a few more chips off the table. Remember, we're 4 dots in, and then the average squeeze lasts how long? Okay, the average squeeze on a 5-minute chart on that squeeze lasts about 5 bars. Okay, so we got to know that. We want to know that. Okay, there, boom. So now I've got 1 contract left. So now I need to come down. Let's cancel. I don't want to have a stop on 2 orders. So let's trail this up a little bit here. Kind of lock that in. Now at this point, let's just let the other one go until this loses momentum. Who knows what this thing's going to do, right? Yeah, and if we want to do a fib extension on this, if you guys are into fibs, which I like the fibs. So let's do this, bada boom. What's the low? Right about yay, give or take. So the 1272 extension would take us to 1442 if it's going to get there. Yeah, trailing stop of $1 looks good. Well, the 1272, at least from this swing high to low, if you guys are looking at a different one, is going to be, through that old high up to 1442. Unless we're talking about, something different. No, it didn't hit the 1272. The 1272 is up here. So you have to get through the old high and hit that 127, unless you're doing a different swing drawing. I mean, I guess I should just stay in it because it looks like it's pretty good. All right. So at this point, we're out of 3/4 of our position. We've got to stop above our entry. So now we're in a low stress situation. Now we're just going to let the squeeze play out. All right. Okay. Okay. So just again, 5-minute chart. I mean, we're doing a 5-minute chart on gold right now, but you can see, hey, 5-minute chart, 5-minute chart, bada boom, bada bing. Okay. So I told Eric I was very happy with this. And then it was a job well done. Though I will say I did start doing some math, and I was appalled at my collective lost profits over the years and not having this. Okay, and I'll talk more about that in a bit. But when we were able to kind of look at the stats tool, I mean, I kind of threw open my mouth a little bit. So this combination created a great new and updated trading strategy and system that would improve my trading right away. But I also realized that had I had this for the last 10 years, I would have made a lot more money, especially on the names that I like to trade, like Amazon. So then at this point, I thought it was a done deal. Then unfortunately, I went to bed. I got a great night's sleep, and I woke up the next morning with a clear head. And although I loved what Eric had done, deep down, I knew there was room for a few more improvements in the updated Squeeze Pro strategy. So I called Eric. I think I woke him up. No, actually, I think he's ex-military, so he wakes up at 4:30 every morning. And so I told him what I wanted. I called him, and by the time I called him, he'd been up for 5 hours. He said, John, that's 2 more things, and I think that's too much. And I didn't really reply right away. And he's like, but if you really want to see it, I was like, yeah, that'd be awesome. So a few years ago, we created this tool called the early in and out. And the first thing I asked Eric to do was to rip the guts out of that tool, recreate it from scratch so it could accommodate all 3 inputs of the Squeeze Pro. Okay. So although the first few tries were really messy, he kind of came through in the end and knocked it out. So what does that mean? So again, here we are. Here's the squeeze, right? Okay. Here's the arrow saying, by the way, if you're going to get in, according to the strategy after 5 dots, I'm telling you, the signal right now is short. Great. Now, if you're still wondering, if all of a sudden you see these green dots, what that's telling you is that the squeeze is fitting to go. Okay. And what I loved about this is that forever, we never really knew when the squeeze was going to fire. Okay. Okay. Is it going to last 2 dots? Is it going to last 5 dots? Is it going to last 25 dots? We never knew. And that could be frustrating because, you might buy an option with 10 days expiration and it stayed in the squeeze for another 10 days. That means you lost money. because that stock is trading sideways and you own a depreciating asset. Well, what's nice about this, when it tells you that, oh my God, this thing's about to go, you can buy a cheaper, shorter dated option, okay? Oh my God, this thing's about to go, you know, boom. So that's what I like about that. And if you look at even this gold trade we did, okay, it's like, hey, this is fixing to go. It's fixing to go. If you don't wait, you're going to miss it because you can't buy it here. You cannot. If we were just looking at this right now, I'd be like, oh, damn, I missed it. Not, oh, let's get in, okay? Missed it. And if you look at that, that's a candlestick chart. And if you look at it on a bar, you can see too, same thing. So at this point, you know, once it fires, once it gets a certain level away, and we'll talk about exactly what that is, you can't chase it. Like you can chase it, but basically what you're doing in that case is just reinforcing a bad habit. Okay, and we don't want to do those bad habits. So you know, again, whatever time frame you're using, here's a 78-minute chart of the S&P futures. We got 3 buy arrows. We got the black squeeze, we got the red squeeze, we got the orange squeeze, and we're just squeezing along, squeezing along. See that green dot right there? That's telling you that one of those is about to fire, okay? And then when you see the green bar, that's also telling you that it is about to go as well, okay? So the green bar, and you can see the green dot happens with a black dot squeeze that is about to fire, whereas a green bar happens with a red dot or a peach dot that is about to fire, okay? So these are all notes that you guys will get. So that's all of a sudden kind of nice because, you know, we're looking at this going like, okay, here's some sell signals. I'm not in yet. I don't know. It looks kind of bullish. It's about to go. It's about to go. So because you can't get in here. Like here, it's like, oh my God, that looks great. You missed it. The whole point of the squeeze, the whole point of the squeeze is to get in here. You're Walmart. If you're a trader, you're a Walmart, okay? What does Walmart do? They anticipate that on Memorial Day, there's going to be demand for hot dogs and that they can sell them for $3. So they load up and import them from China or wherever for $1 for weeks and weeks and weeks, and then price them to sell here because they're anticipating that demand. Okay? As traders, we're doing the same thing. We see the squeeze, we got buy signals, we're anticipating the demand. And guess what? You know how many people get FOMO and instead of buying here, they wait until it quote unquote looks good? All right, they're buying it here. Great, we're giving it to them, okay? They're shorting the dead lows. We're already here. We're going to help them, you know, we're going to give that short to them, okay? We're going to give that to them at that point. So that's the thing is that you got to think of yourself as you are doing a service, but who are you going to sell that to? All right, you got to have a signal where it's clear that there will be anticipated demand because you know a lot of people out there like to chase. So that's what we like to do. I don't know where hot dogs come in now. I think the biggest hot dog producers are Iowa and a city outside of China and maybe somewhere in Canada. So who knows? So McDonald's, and by the way, we got another signal in McDonald's, but on this daily chart of McDonald's, you can see the signal here. We actually recently had another signal in McDonald's. So let's go look at that real quick because this is one we're in right now. Daily chart, let's look at McDonald's. And you can see here we had a new squeeze, right? Now, we had the arrow, so we got in here at that level, and it hasn't even fired yet. And this is one where, and now I'm kind of regretting my decision here because I did this as a debit spread. Well, it's probably okay. But, you know, we got the debit spread at 450, and it's currently at 670, right? I'd be making a little bit more if I just had the long call, but, you know, again, just having kind of more of a theta positive position there. So again, that's in McDonald's. So, okay. So Alta, so here's the other way to use this early in and out. Okay. And by the way, the whole point here with McDonald's was, oh my God, there's the early warning there. Let's do this. So there's 2 ways that this early warning works. Okay. 2 ways that this works. Does this work better for futures or stocks? Either one, Forex, gold. I mean, it's just whatever the underlying is, the principles are the same. So here's the other thing, because I want to tell you this, the reason we call this the updated system is that I want to show you the old way of exiting a squeeze. And by that, I mean, you scale out as it goes your way. And if you have that last contract, what do? Well, the old way on this, I would have gotten out at point number 2, which means you have a loss of momentum for 2 bars in a row, and then you get out on the 3rd bar. Okay, and that means that you get out here. Instead, not only does this early warning give you green dots when it's about to fire, these bars, which you'll notice are basically mirroring the momentum here, actually change early based on the idea that the momentum's about to change. So the bars are actually sensitized to detect when momentum is about to change, okay? Now I'm getting out at point number 1 when the bar is like, hey, the momentum's about to change anyway, buddy, so you might as well get out, okay? And then you can see 1, 2, 3, 4 bars later, and the stock's dropped 20 points, okay? So the old way, I would have lost a lot of money by doing that, okay? And it's the same thing here. So here we're short, got the short signal, great, great, great. Boom, momentum's changing. Okay, great, I'm gonna get out here. And yeah, it does go down a little bit more, but then it just rips higher. And I would have been in this doing absolutely nothing, and in fact losing money on premium decay for 1, 2, 3, 4, 5, 6, 7, 8 days. 8 days of pain, okay? Catch the money and get out. So again, the early warning has got 2 things going for it. It's telling you, hey, the squeeze is about to fire and the momentum is about to change, okay? So using that same analogy, if we then come over here to the gold chart, which I continue to appreciate it for cooperating with us during this class, is that if this candle turns dark blue, I'm going to get out, okay? Because that's telling me that the end is near. Now it looks like we did pop to new highs, so a lot of crazy stuff going on there. I don't mind leaving that one contract in and see if we can get that dark blue bar. Now we can trail at the stop a little bit because right now we've got a good comfortable 5-point stop. Remember the average move here is $2, so let's just go ahead and trail at the stop a little bit. Let's do 36.60. I'm going to do it $2 below where we are right now. So we're at 38.80. Okay, so that's close enough. So if I get stopped out here, I ain't gonna cry, right? So otherwise, I will get out when the momentum changes. Oh, you got 3,000. Very nice. Very nice. So does this work on crypto? So it works on the ones you can chart. So like we look at Bitcoin futures, and so goes Bitcoin, so goes a lot of them, right? So you can see you got the buy signal here, nice move, nice pop from 6,000 to what was that, about 8,000, and then another buy signal, nice move here from 8,000. Of course, it spiked up to 14,000. Don't have a squeeze right now on it, but let's see, we had a 30-minute squeeze here, and yeah, it looks like it's cruising here. And of course, Bitcoin is moving with gold. Assassin, I have not used this on penny stocks. I have found that it works on any asset classes where you're getting this ebbs and flows. I personally don't trade penny stocks. Penny stocks are fine, so I'd have to look at it. But the nice thing is there's a stat tool that'll take a look at there too. All right, so let's keep cruising here. Okay, so yeah, so we've already looked at some of these examples. So again, very solid and helpful. So the second part I asked Eric about was just statistics. I'm like, all right, I like all this stuff, but give me some statistics. Like, when we're looking at gold, and we could see from the stats that the average squeeze on a 5-minute chart is $2. Okay, now this one's been more than that, but at least if we know what the average is, we know where we should take some chips off the table. So here's the spiders on a daily chart with the stats tool. So over 20 years, and of course, the stats will basically tell you statistics, however far back you go. So, I mean, going back 2 years is fine. But I went back 20 years, and over 20 years, there's been 122 squeezes, 71 have fired long, 51 have fired short. The average squeeze length is 6 dots, meaning 6 dots to form. The average post-squeeze run is 5 dots. That surprised me. Okay, I thought it was more than that. I thought it was going to be 8 to 10, but this is telling me statistically it's only 5. Okay, the average post-squeeze move $4.64. And of course, you'll have some big ones. So this gives me a lot of solid information, meaning that, you know what, if the squeeze typically the last 5 bars and $4.64, I better be taking some chips off the table at those levels. That was huge in terms of managing a trade. In terms of not getting out too early, you don't need to take profits up a point. You've got, the average is a little over 4 points. Give it time to at least do its average move. So this was great. And of course, I wanted more info. And of course, I wanted data on the new squeezes, not just the regular squeeze. And unfortunately, that became a total cluster. So here we've got the black dots, the orange dots, all that kind of stuff. And it was like, I mean, man, I love this information, but my God, it was such an eyesore. And knowing myself, I knew I wouldn't be able to do much with that. I mean, we can see that on over 5 years, we've got, oh, thank you. Okay, so now, okay, you can see we're losing momentum here. So let's get out of the last one, boom, done. So 4 contracts, $1,250, just following the signal, okay? So here, I'll take a screenshot of this. We can throw it into the presentation window. So hopefully that made sense. I mean, obviously on a 5-minute chart, things happen a lot faster, but the idea was we got in, and let's look at this over here. We've got gold. We've got a 5-minute chart. And yeah, there we go. So yeah, we'll see if there's another signal, but again, on a, think about it, on a 5-minute chart, that's great, but obviously you can do this on whatever time frame that you want to do, which is nice. Okay, so if you look at this, what's great about this is that you get data from all 3. You got the black dot squeezes over 5 years, you got 46, okay? The regular mid squeeze, you got 31, and that little orange dot, you got 5, okay? So it just tells you like how many times they've happened and what the average move is. So for the black one, the average move is $4.31. For the red one, it's $4.41. And then for the orange one, in this case, it was a little lower than I thought it would be. But again, it gives you data. So what Eric did with this is that he kind of played around with it. And so now I can look at it either, I can look at a summary of the key data up here like this, or if I want to just break it out and put it down here, okay? And the summary a lot of times is fine. The summary gives you actionable intelligence, okay? So on Google, here's great, 20 years on Google, we can see that there have been 80 of the black dot squeezes, 47 of the red squeezes, and only 4, oh, I'm saying this wrong. It's actually 80 long and 51 short, okay? 47 long and 34 short, 4 long and 1 short. So it gives you a sense, and you can see that the average move here is $42 and the average move here is 40. Again, the black dot squeeze has more instances and they typically work out a little better. So that was the part that was a huge surprise. So NASDAQ, here's a 2-hour chart. So same thing here. You can see that the black dot squeeze, 90 over a year, 90 longs and 66 shorts. Okay, average move is 47 points. That's a lot of at bats. The red one was a little better. You got a little fewer signals, but average move 68. And then the high one, the orange one, you didn't have that many, but the average move was clearly more, almost twice as much as this one. Huge important data there. 2-hour chart on the SPYs, so same thing there. Okay, so hopefully you guys get the idea here. So you can utilize this stuff. So my whole thing is that, and I'm a big believer in the 21 period moving average. So this is the 21 period moving average. Whatever chart you're using, 30-minute chart, daily chart, if you get a squeeze and you're near that 21 period moving average, in this case, histogram's above 0, you got a buy zone, get in. That's my perfect scenario, is you've got a squeeze, you're near the 21, get in, all right? So, it's one of those things where if you see that there's a squeeze, but it's already up here, it's too late. Yes, it keeps going, but it's too late. So again, see that squeeze, get the arrow, get in close to the 21. It doesn't have to be exact, ballpark is fine. Okay, and you can scan for these too. So, if, which is great. So you can sit there and say, great, I need to know what black dot squeezes are setting up in all optionable stocks with weekly options. And in this case, we got Disney, Dish, Met, et cetera. So that's great. And in this case, here it is, and we can see that this was set up when Disney was at a little over 130, and of course since then it's had a really nice move higher. And so that's kind of nice too, is that you can set it up for, and of course whatever color dot you want to, red dot squeezes, black dot squeezes, orange dot squeezes, and you just press the button, and that gives you kind of your watch list for the day, and that's helpful. BSX, good example there. Now, I want to show you a trade that we did today on Roku. Okay, I don't have the arrows on this one, but on Roku, you can see here that we had a nice kind of a black dot squeeze here, fire short, and the red dot. Today we were looking at Roku, and as it was consolidating here, it's like, man, I want to get into this. And when I looked at the old squeeze, and that's my rule, if there's not a squeeze, I'm basically not going to trade it. Like, sorry. But there's a beautiful black dot squeeze that fired off at the close, right? So that means we can kind of, continue to hold on to it. So when I see something like that, I'm willing to get in, a little bit bigger, because you got that 30-minute squeeze back in it, and you got some action here, and it's good for $6,200 over a couple hours. So on something like that, that's the kind of stuff I want to see intraday, is you get those. I'm really not, I did the 5-minute squeeze of gold. I'm really not as interested in that though. I am interested in like kind of those 30-minute squeezes and above. Okay. PayPal, these are some signals that we took a couple of weeks ago when I was doing a class. We got a beautiful setup in PayPal. There's the squeezes. Beautiful setup in Visa. Here's the squeeze. Look at this early warning. We got in here and it's like, early warning. It's just screaming, please get in. And it goes right to our target. Twilio, early warning, explosion. Okay. And so what I do when I do live classes, I'll trade one lot and track it. And you can see here that basically, we did Cyber, Disney, Lyft, McDonald's, PayPal, Square, Twilio, Visa on this particular day. It was $1,036 in profits. And the goal there is, when you're doing one lot, is can you pay for the class, kind of a thing. And obviously if you're doing 10 lots, that have been $10,000, et cetera, et cetera. So that stuff's always kind of nice. The other thing that we'll try to do is during live trading is I always like to look for any strong MOC, which is market on close orders, and you can do some great stuff with the SPX. And if you've got an account under $25,000, what's nice about this is that you can, it's a workaround around the day trading rule, which is ridiculous, because you can let it expire and it just cash settles. So if you have Thinkorswim, you hit the plus button down here, you find Trade Flash, and you're looking for that MOC, which comes in toward the close. On Friday of last week, it said 5 billion to buy. Okay, it was just exploded higher. So there's some interesting things that you can do there with the SPX options, and of course, if there's a squeeze there, it's a bonus. So one of the things that Mark Douglas said, which I love all of his stuff, is consistent losers do almost everything to avoid accepting the reality that no matter how good a trade looks, it could lose. I love this quote. And if you're really serious about trading, you want to embrace this. Consistent losers do almost everything to avoid accepting the reality that no matter how good a trade looks, it could lose, okay? And what I like about this is it gives you very clear signals. If you get into a squeeze long and it fires short, you just get out. If you're in a squeeze long and it loses momentum, you get out. It's crystal clear when you should no longer be in, okay? And that is hugely important. So you've got, part of this is that it's designed to save yourself from yourself. The markets are designed specifically to manipulate our minds and get us to chase moves when they're about to end and to hold on to losing positions too long, all right? The key to combat this is to have a system or strategy with clear entry and exit points, so you will know when it is safe to give in, know when it is too late to get in, i.e. don't chase, don't do that FOMO JOMO thing on Momo, because there's always another trade, there's always another setup, and knowing when to get out. If you guys were in our room, this is a while ago now in 2014, but I had a day trade where I made over $1 million in a day, and that's awesome. But that does take a lot of emotions as well. Like I didn't sleep that night. I sold half, and I didn't sleep that night very well. But I like something that's simple enough. These days, look, I got kids, I got a lot of stuff going on. I want to be able to manage this from my cell phone. I don't want to sit there and have a lot of emotional ups and downs. It's like, all right, just give me something that I can do from my cell phone. And so overall, I found this to be fairly amazing in terms of getting more high probability at bats at the market. Okay, and I think this is really key. I think you guys saw with that black dot squeeze, you're basically getting more at bats. And not only are you getting more signals, in many cases, twice as many signals, they're generally a little better. Okay, and again, that was the huge surprise for me, because I thought that if we increase the quantity of signals, we would sacrifice the quality of signals. I mean, I just assumed that was it. And my main problem was going to be, gosh, is this acceptable? Are we going from 75% probability to 62% probability? Is that acceptable? And instead, the probability increased and the move increased. And I did not expect that in any way, shape, or form. And I always like to test this stuff out first before I start using it in our room or any of the services. So now you'll know why I start taking some stuff that you may not see. Like, why are you taking this? There's a squeeze. No, there's not. I don't see a squeeze. It's a new squeeze, right? So although I'm still on the lookout for home runs, I'm also on the hunt for consistent base hits. So here's what I mean by lost profits. And this actually started to make me a little mad, a little angry in a reflective mode. So the normal squeeze over 10 years had 63 instances, okay, with an average move of $3.49. Okay. If you're trading 10 options per contract, that's basically an average of $3,490 per trade. On that black setting, there was 94 squeezes over 10 years with an average move of $3.79 or $3,790 over 10 option contracts. Okay, and I'm getting all the stats from right up here: $3.49, $3.79, 34 and 29, 52 and 42. Basically, that's 31 additional squeezes I could have caught, or $117,490 in lost profits trading 10 contracts at a time. It gets way more horrible. So Amazon, which is a stock that I really like to trade. Yeah, I'll keep an eye on Google or gold here too. So Amazon, I love trading Amazon. The squeeze that I've been using over 10 years on a daily chart has had 66 instances, okay, over 10 years, with an average move of $75.68, okay, or about $52,976 per 10 Delta 70 contract options. So I know that's not perfect math because the deltas will change, but basically what I did was, if you start off with a Delta 70 option, for each dollar that the stock moves, you're making 70 cents. Technically, the delta is going to increase as it goes your way, but I thought it's fair to use the lower number. Okay. How many black dot squeezes were there? 108 over 10 years on a daily chart with an average move of about $1 more, okay? Or if you're using 10 Delta 70 options, that's $53,000 per instance. That is 42 additional squeezes I could have caught, or $2.2 million in lost profits trading 10 contracts at a time. That was the one that really gave me the sad face, because I was thinking like, okay, this new squeeze, I'll get like, instead of 5 signals, I'll have 6, and yada yada yada. So that really opened my eyes, and it did make me cry real man tears for a few minutes. So if you like all this, so when it comes to kind of learning something like this, a new strategy, new tool, it is best to dive in and get to know it intimately in a focused setting, so you don't have to experiment with trial and error, which can cost you money. And it takes dedication to first learn how the system works and when to apply it in various market conditions. And I think, as you saw with gold here, I think it requires real-time live market trading to really understand a signal, okay, to understand the functionality. So I am going to do a deeper dive with this next Tuesday, July 9th, and we'll have an opportunity to trade live together. Okay. Now, if you guys already did the Squeeze Pro class with me, you guys are welcome to come to this class. We'll send you an email invitation. You guys have already done the pro class, so this is included in that. If you haven't and you are interested in this stuff, this is how you get the tools. All right. So you're going to go to simplertrading.com/explosive. Okay. It does sound like a medical condition, but it is not. And if you go there, you'll come to this page, and with the basic package here, you'll get the Squeeze Pro, which of course is the main thing that we've been talking about. If you remember, this is the one that's got the black dots, it's got the red dots, it's got the orange dots. Okay, that's what we traded on gold. That's included. It's got the buy sell signals. Okay, those are the arrows. That's included. And then we're going to do this live trading session together on July 9th in the afternoon. All right. And you'll get an indicator setup video. That's huge because if you're not familiar with the stuff, it can be kind of a pain. If you want to get that early in and out, that shows you, hey, the squeeze is fixing the fire or the bars are changing. Okay, that's the pro version. So that also includes all of this. And if you are intrigued by the stats tool and you kind of, if you really like to geek out on that stuff, on this stuff, then you want the stats tool. And then the elite package includes early in and out, and then all the stuff in basic. Now, as a bonus, I guess I don't know if it's a bonus. If you're looking at this and you've got like a small account and you're like, I don't know, I got a small account already. We have an option here. If you add to cart with PayPal, where you can do no money down for 6 months, you can make no interest. So what'll happen is you go to PayPal, and then what you do is ignore this one and choose PayPal credit. Okay. And then what'll happen is it's 0% interest for 6 months, 0 down. You can pay as much or as little as you want over 6 months. And after that, they'll start charging interest. So obviously the smart thing to do would be to pay it off within 6 months. Ideally, it's, profits from a trading account, but obviously that's going to depend on what style of trading you're doing. And at least that gives you a chance to have it if you don't necessarily have the funds right away, because then you can at least use the tools. Okay. So again, basic package, you get the Squeeze Pro, you get the arrows, plus indicator setup training video and the live trading session. The $897 includes everything I just talked about, plus that early in and out indicator. And then the elite package includes everything I just talked about, plus the stats, which I love. And I know not everybody gets into the stats, but I like the stats. Right now, we do have these for Thinkorswim or TradeStation. Okay. Now, if you're looking at this and you've got Fidelity or you've got Schwab, unfortunately, we cannot create the tools for those platforms. They just haven't opened them up to us. However, a suggestion is open up a TOS account, that's Thinkorswim, because it's 1,000% free. And if you open it up, and I think you can just deposit like $100 in there. And again, it's not a fee, it's still your money. And then you can get real-time quotes, you can look at the charts, and then you can execute on whatever platform you want. Okay, and so that's kind of a nice workaround, because again, it's no cost. And then from there, and there you go. So I'm happy to stick around and answer questions. Again, the main thing here is that if you're interested in this, you're gonna go here. You gotta type this into your computer to get this page, okay? And then the live trading session is on July 9th. And I think we're just doing it in the afternoon. We'll send you the times and everything like that. I think it's like at 1 p.m. Central. And then, and that's it. All right, so let me see if there's any additional questions here. So, okay, so good. So two good questions. First of all, if you already did the Squeeze Pro class and you want to do the live trading, that's included. So we'll get you an email. Now, if you already did the Squeeze Pro, and let's say that you did the Squeeze Pro and you only got this and you want to add that, just give us a call. So give us a call and we will take care of you. You can also email us at support@simplertrading.com. if that makes sense. And no, I mean, that's the only live trading session that I've got, but it'll be recorded. So, you know, if you're not, you know, it will be recorded, so that'll be fine there. And so you'll be able to actually go back and take a look at it. Does the basic include the tool that shows the squeezes? Yes. So the basic, the basic does. So remember the Squeeze Pro. The Squeeze Pro is kind of the meat of this whole thing. So this is the black dots, the black, red, and orange dots. So that's the main one you want. If you're only gonna get one of these, that's what you want. But luckily, this is also included in that. That's the arrows. Okay, that's the fixing the fire. And then of course, these are the stats. Yeah, Jim, so all the instructions are included. So what I'll also do is during the live trading is I do take screenshots of the things that we do, and you'll also get a copy of that as well. Dun, dun. Yeah, well, if you did the course, remember we did 5 hours of a Saturday and we did 3 days of live trading. So this is for the indicators and 2 hours of live trading. What is the difference between the old early in and out indicator and the early in and out pro? So Roy, the early in and out pro is modified to work with those black, red, and orange dots. The old one's fine. It's just triggering off of those red dots. Are all of the arrows part of the Squeeze Pro buy sell signals? Yes. No, so we did do an entire course on this, which included like 5 or 6 hours on a Saturday and 5 days of live trading. So we've already done that. And that's in our store if you are interested in that. That was a pretty locked and loaded. So if you do dive into this and want to kind of learn this more, I mean, this is basically if you want to get the tools, and then we'll do 2 hours of some live trading just to make sure you know how to use them. I just want to ask, does it tell you which direction the squeeze will fire? So Jim, what the arrows do is that, again, this is all based on probabilities, right? There's nothing that works with 100% certainty. But if you, like if we looked at here, let's look at gold here real quick. So if we look at, where is gold? Let me see the last one here on this, or let me show you the daily chart on McDonald's, because that one we just did. So if you'll notice here, and I'll show you, try to find one that doesn't work here. So here it's saying like, yep, you can buy it, you can buy it. Now part of what we're going to be talking about is that I want to buy it closer to this line, okay, closer to this moving average. So, you can see it kind of came down a little bit, but eventually it did go, right? And that was kind of a long squeeze. But that's what you're kind of looking at. It's like, that's an official buy signal. But when I see that, I actually want to buy it closer to the 21 period moving average. Like that's the 8 period moving average. That's the 34. But I'm going to lay all that out for you guys during the live trading. I was sold until you said there's no training except quick live trading. Okay, so we did do, Robert, 5 full days of live trading last month. So if you are interested in that, that is in our store. And you can add that to this. This will be 2 hours of live trading, so you will know exactly what to do with this. And I promise, what the nice thing is after I've already done 5 days of live trading, I can summarize it all in pretty good in 2 hours. I mean, if you learn something during this free webinar and watching me trade gold, guess what? You're going to learn a lot during 2 hours of trading as well. John, when the squeeze fires to the wrong direction, when do you get out? So if it fires to the wrong direction, typically what I like to do is, it fires. Typically there's going to be a retracement, and then I try to ease out at the retracement. So what we do is we set up hard stops, and then there's also a system for trying to work our way out of it as well, and I'll cover all that. Does it work with a tick chart? You know what? I have not used it on a tick chart, but as far as I know, it does. So before I say something that it's not true, let's just go check. So if I can remember why can't I remember where it is? Save style, set default chart. So let's create an intraday tick chart, 133. I like the 512. Add, apply, okay. So yeah, so I do, if I'm using tick charts, I'm typically doing it with futures, but you can see that, yeah, it's been setting up there and stuff like that too. I thought it did, I just didn't want to say it did, and then all of a sudden it didn't work. Are there any performance guarantees for the product? Well, it's a good question. I mean, basically the thing is that you can look at the history and say, you can see the stats and say, wow, this works with a 75% probability of success, but there is no way to guarantee that the next trade is going to work. So basically it's one of those things where it's like, if you're fine with something that works 75% of the time and it shows you exactly what the average win rate is, then, I mean, to me, that's a high probability trading system. I've used it for 15 years and continue to use it. Let's see, what else? I purchased the Squeeze Pro, but the link to the early in and out Pro doesn't work. So yeah, if you've got obviously any problems with that, just send us an email. We'll make sure you're taken care of. Yeah, and so if you want to, and if later, and the main thing here is that if you see something here that what's great here is you get it, you can download it, you can start using the stuff, and if later you want to, add the stats, just give us a call. What are the most accurate time frames? So I prefer 30-minute charts and above. Only because now, yes, I did trade the 5-minute chart in gold tonight. It worked fine. And it's just that most of the time I'm looking for trades that have a little bit more juice to them. Now, gold futures, they're pretty volatile. 5-minute squeeze is fine. But I'm typically, if I'm trading like the S&P futures, I am looking for those larger time frames. And if I'm doing stock options, I'm generally looking at, 2-hour charts and above. I personally just don't, I'm not a scalper. I used to be when I didn't have kids. Oh, it's a good question. Is the use of this software a one-time expense or is it a yearly subscription? So you'll probably all be pleased to know it is a one-time expense. Yeah, so good question. So what if the Squeeze Pro fires short? Yeah, so you're doing the exact same thing, just the opposite. So if we look at S&Ps, okay, I thought there was a short signal here a little earlier. Maybe that was one. Yeah, okay, so here it is. We're following. Let's actually get this one so we can kind of, we'll do a 15-minute chart, S&Ps, because there was a sell signal. I think it was a 15-minute chart. Yeah, okay, so here you go. So you can see it fires, boom, 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 boom. And then there's another one. Oh, where's the one I was thinking of? Of course, it's been a pretty good uptrend. Okay, so here you can see it ends up firing short. You're going, loss of momentum bars. So different things so it's just exactly the opposite. Good one here. So squeeze, boom. Now remember, if you get the up arrow, it just means that the momentum's above zero. But there's another setting where if it's above zero and falling. So we'll talk about that too during the live trading. And that one there. So, and again, I generally like larger time frames. So, give me like a 4-hour chart. You're just gonna have potentially bigger moves and stuff like that too. Let's see, like this one here, sell signal, boom, falls pretty good, 100 points. And then here's where you'd get out. So just the opposite of what we were looking at. Well, we'll talk more about in the live trading. If it dips to the 21, how do you know it's not going to fire short? Generally, if it dips to the 21, it's not going to ruin the momentum. It actually typically needs to close below the 34 to do it. But we'll talk exactly what and I'll share with you the chart setup that I use. I use Keltner channels and stuff like that to help kind of identify that buy zone. Yeah, so beyond meat, I mean, of course, that's one where it's been a newer stock. I don't know if there's been any daily squeezes on it. There's a 4-hour squeeze that's setting up right there. If you look at a daily chart, I mean, it just hasn't been around long enough. Like, you got to get some history there. So if you drop down to like a 30-minute, you can see there's a short signal right there. There was a buy signal right there. It's pretty clean. Oh, very nice, Evan. Yeah, no, it's yeah, that was a fun interview. No, I mean, I definitely like it on indexes, spiders, Qs, but I use it on individual stocks as well. For sure. Let's see what else we got here. Yeah, Chipotle's right now. There's a squeeze starting. We've got the first dot there. There was a nice squeeze here, nice buy arrow, huge move there. We caught some of that. Yep. All right, guys. Well, awesome. Well, I'm going to leave this up here. Let me make a few notes here. And yeah, for those of you that are doing this, I mean, again, the live trading is pretty fun. So, again, this will be on July 9th. You'll get an email for it. If you've already done the Squeeze Pro class, this is included with the class that you did. This is the red, black, and then the orange dots. These are the arrows. Yeah, that's how to set it up. And that's fixing the fire, fixing the change, stats. And then two things, again, remember, you can PayPal and no money down, no interest for 6 months. If you want to do that. And then if you did one of these with the class, just call us and you can upgrade if you would like and say, oh, well, I did these. I want to get, the early in and out. Yeah, so for those of you that are interested, I'm actually starting I do have it's a trading service that we started in March, I think it was, kind of based on small accounts, but we've started to incorporate the Squeeze Pro into that. So if you guys are interested in that, you can go to simplertrading.com/master. And this is a signal service utilizing Squeeze Pro and a few other things. Yeah, and we will, and yeah, with this class too, you'll get some scanners. I set up some scans, so you'll get the scans that are toss-based. You can also do them in TradeStation. No, for PayPal, you can use it with any of them. Yeah, any of them's fine. Very good, guys. All right. Well, it's been about an hour and 40 minutes. So hope you guys had fun. It was fun trading gold. Maybe there'll be another setup on that tomorrow. You guys have a fantastic night. Oh, with the micros, I'll have to check that out. I'll have to check that out, David. And yeah, you guys have a fantastic evening. You know, obviously we've got positions on in the room and the small lot program. I'm planning on doing, you know, we're going to look at and do a lot of updates tomorrow. Of course, Thursday, the markets are closed. Remember, the markets close early tomorrow. We got a full day on Friday, which I'm assuming will be quiet. And then we'll go from there. All right. You guys have a fantastic evening. I will leave the screen up. Remember, to get this page, you just got to type in this link. You can't click on it. You just got to type it into your browser. We're here if you've got any questions. You guys have a great night. And I hope to see you during the live trading on July 9th.